Hey guys, in today's lesson, we are going to be talking about month end. And I'm going to give you a high level view of everything. Remember, I do have a full in-depth month end course that covers a whole bunch more, but I'm going to give you the basics of everything you need to know so that you can kickstart your bookkeeping practice. So today I'm going to be talking about my concept of phases of month end, how I go about creating a month end checklist, comparing what I do to QBO's month end tool, looking at reconciliations in QBO, why I utilize work papers, then reviewing the balance sheet and the P&L. So let's kick it off, okay? So first thing I want to talk about are the phases of month end. And as you can see here, I have 4 phases. I have the planning stage phase, reconciliation, work papers, and review and report. So there is a purpose to each one of these. And notice that what I'm doing here is I'm taking a phased approach to dealing with month end. And there's a reason for this. I've split up month end into segments, into more bite-sized pieces, so that I can do planning for all of my clients at one period of time. Then I have a phase where I do reconciliations for all of my clients, and it continues on like that. The reason I do this is so that we can move all the clients along the timeline at the same time, and we're not going to get stuck on one client for a longer period of time than we expected, and then that pushes out the deadline and what we're able to accomplish for everyone else. And the other benefit here is that if I need some information from a client, and if I were, say, doing this, clients 1 through 10, and I started with client 1 and I went all the way through client 10, we don't know how many days into the month I'd be start working on client 10, and then I'd have to request information at that point. It would have been better if I had started it at the beginning of the month and requested it then, and then continued on the phases within month end with all of my clients. So we're all kind of on the same timeline and going, and we can see if there's any problem children that we need to hold back and come back to. But as you can see, I like these phases. It keeps it systemized. It's also broken up to the point where you can walk away when you're done with reconciliations. And when you come back to it, it's not like you're having to figure out where you left off and recreate things in your mind and figure out what's going on. It is reconciliations and they're done. And then go to work papers and you're done, and you're able to do that with all of your clients. So that's what I like to do. And the first phase to month end is planning. And what I like is to, at the first or the last Friday of every month, I like to take a planning day and plan out what I'm going to do for the next month. Okay? And what I'm doing here is coming up with deadlines for these phases within month end, and then also marrying that up and balancing that with the weekly and ongoing services that I provide my clients, so that I can really have an understanding if I am overbooking myself or underbooking myself. And what happens is when you go through a month-end process or close process, usually the first 2 weeks of the month are really busy because you're doing the weekly work and on top of doing month-end work. So you're doing both of those at the same time. Now, what'll happen is you'll notice the 3rd and 4th weeks about end up being lighter weeks for you. So they're great times to take on projects and maybe work on your business, take a vacation, all of that. They seem to be lighter months or lighter weeks, so you can handle more during that time. And that's where I talk about really planning out your workload and how you do things. So if you're doing payroll for a client every other week, you want to put that into your calendar and compare that to what these other phases are. So I like doing the planning the last Friday of the month for the following month. And then the phases I like to split up. So reconciliations I like to get done around the 5th of the month. Then I like to get the work papers done around the 10th. And then review and report the final stuff I like to get out by the 15th of the month. So what'll happen is we have these crazy things like weekends and holidays, right? And they impact what we're doing and like I don't want you guys working on the weekends if you don't have to, or if you want to, great. But this is how we balance it out here. So, for example, on the 10th, it lands on a Sunday in January. So I pushed that deadline to the 11th. Okay, because I'm not going to get that all done. The other thing is I like doing the reconciliations by the 5th is because usually the first day or two of the month, you're not going to get those bank statements. So you're not able to even actually do the bank reconciliations yet. So that's why I like to give myself to the 5th. So it's usually around 3rd, 4th, or 5th that I'm doing those bank recs for the clients. Okay. So this is the whole layout that I have here on planning and what I go through, and I create this calendar. Now, for you guys, I have created a template for the year, so you'll have this look for all of the months, and you can utilize that as a way to schedule everything out for you, or just a guideline, however you want to do that. Okay, next, let's talk about how I go about creating a checklist for my clients every month for month end. So really you're going to do this one time, and then you're going to copy the spreadsheet over for every month and make any minimal changes that you need to do going forward. So on your planning day, this will be a little bit more intensive for the first time around for a client. Okay, you want to create this checklist to have an understanding of what you're going to be doing at month end and how you're going to do, what all you're going to do, what you need to worry about, all of that sort of stuff. So let me tell you first what I go through is you can go and do two things. You can run the balance sheet and you can run the P&L and pull that out and export it and put this into a spreadsheet. You can also just run the trial balance and export it and get that into here. Really what I need, or what you need to pull out, are the chart of accounts. The accounts, we need assets, liabilities, all of that sort of stuff. That's the first step to creating this checklist of what accounts are we going to be dealing with, right? Then let me give you an overview of what's happening in this checklist. This comes back from my audit days of where you get a checklist of how you're going to do the work, and then you're going to sign off when you're done with whatever you did. Okay, so in this instance, we have our accounts listed out. I like to group them as assets, liabilities, equity, revenue, cost of sales, expenses. What you'll see in the P&L area is I group it a lot more because we're not going through as much detail on things. It's really important to lock down the balance sheet and get all of your numbers right on the balance sheet when you're going through month end, because everything else flows to the P&L, right? We can look at those revenue expenses fine. The balance sheet is where a lot of people forget to pay attention to things. A lot of new bookkeepers out there, or people that have no accounting experience, they don't pay attention to the balance sheet. They also think month end is just bank reconciliations. And so a lot of mistakes and everything can be hidden over here on the balance sheet. That's why we want to have a very clear understanding of what makes up all of these balances. Okay, so I have the accounts. The next thing I have is a listing of tasks, the things I'm going to do for these accounts here. Okay, then I'm going to put in what the due date is for it. I'm going to then, when the person that's doing the work completes it, they're going to put in their completed date, and then they're going to sign off with their initials. Again, back to my audit days, this is what we did. Then if you have a reviewer on it, they can have the review date and their sign off that's saying that they did this. I set this up so if you're just a solo practice, you don't need that review date area. It's just you. But if you have staff, this is a great place where They are going to do the work, and you know that you're going in and reviewing that work after the fact to make sure everything makes sense to you. Okay, so let's talk about the type of tasks that we do on these accounts. So the very basic everyone knows is reconcile your bank accounts or reconcile your accounts. You can reconcile almost any account within QBO, with the exception of a few like accounts receivable, accounts payable, retained earnings. Those sorts of accounts you can't reconcile. So if you have an other asset or something like that, you can technically reconcile that within QBO. So that is a task that you can do if you want to put that on there, if that's what you want to handle it with. What we want to make sure is that we have an accurate number on the balance sheet, and we have a full understanding of what makes that number up. Okay, so the next thing that I like to do is like prepare or update work papers. Those are usually, it can be a third-party documentation for something, or it can just be a spreadsheet, some sort of support that we have that makes up these numbers. Remember, with the balance sheet, this is a cumulative total of all of the debits and credits that have happened in these accounts since the beginning of the business. It's not like the P&L where you have just transactions from a period of time. Remember, this is everything. So if I'm looking at a balance and I want to understand what makes that balance up, why is that number there, just going into the detail can be rather confusing. Because if you have just random debits and credits in there for whatever reason, they don't have to be random, but like we're netting things out, zeroing things out, it doesn't easily show us what makes up that balance. So that's why I go in and I really like to have these work papers so I can support that number if anyone has a question about it. And I can make sure it's accurate by having that support and looking at it and reviewing it. So that's why I go into liking to do work papers. We'll talk about that more in a minute. But another thing we can do is just review a report. So I like to do that with accounts receivable and accounts payable. I like to just run the AR aging or the AP aging. Look at it at a high level and see if there's anything that pops out at me, like negative balances on there. There's something wrong, right? Or if there's a lot of past due amounts on there, like really old amounts, then it's something that I might communicate that with the client and be like, hey, do we want to write off these invoices, or why haven't these bills been paid yet? That sort of thing. So it's a communication and having a clear understanding of what's going on with those accounts. Some other things are not going to change regularly. Something like a security deposit. I know what that amount is. It's not going to change for 5 years of the lease, 10 years of the lease, and it's just there. So I want to make sure I'm going to note changes. I'm just going to see if it changed from last month and see, okay, if it didn't, we're good to go. If it did, I need to look at it, investigate it. Why did something get added or subtracted from that account? Then I have here listed SB0. That means should be zero. So there are some accounts that just should be zero. I like uncategorized assets, uncategorized expenses, those sorts of things I think should just be zero at the end of the day. So it's an account, a task that I look at to make sure that those are zero, and then if they are, sign off on it, done, right? If it's not, I have to go through, figure out why and how to properly code those transactions. Another thing is QuickBooks likes for you to have a zero balance for opening balance equity. It usually is a balance that transactions go to when you're setting up the books, and you might have like different entries that net each other out, or maybe you're putting in beginning balances, whatever it is. They like it to be zeroed out and moved over to retained earnings. It's kind of like a plug account at the beginning, and once you figure out what's going on, then you can make an entry to move it to retained earnings. So they recommend that account is zero. It can be a preference for you. You can decide not to do it. If you take any of the ProAdvisor tests, they're going to say it needs to be zero. Always needs to be 0. So it's cleaner just to not have anything in there, or no balance in there. Then there's other things you can do, like confirm your expenses are in the right area. If you have specific things that set up with the company, so if you're using classes for the company, well, have a task to confirm that classes are on all of the transactions, and you want to review that and make sure that's all taken care of. Then I have some examples on here, like discounts. Confirm those are actual discount transactions within that account. And look at, looking on here, product transactions. Make sure those are actually product transactions and not service revenue sort of stuff. So there's plenty of, let me go back, sorry. There's all these different things that you can do, these tasks, and really what you're trying to figure out is what task can you do to make sure that you feel very comfortable with the balance and the amount that is on there for that account. Like I said, we lock down the balance sheet. That is important to really have a clear understanding. And then what I like to do, and I'll talk about that later, is on the P&L side, I do more comparing balances and do a high level dig into the detail of these accounts to make sure things are in the right place. But once you get the balance sheet right, everything flows to the P&L, revenue and expenses, and you just need to make sure that nothing's crazy there, and everything's kind of just in the right place. So really the biggest important is that balance sheet. And I have a template, this template set up for you so you can see how that is all done. So you'll have that for you within this lesson. Okay, so now I want to compare my method with what is available now within QuickBooks Online. I have had several people ask me, how do the two compare? It sounds like QBO has this great month-end tool. People are loving it. How, why is what you're doing different? So my top level answer here is it's a great start. QBO's tool is a great start, but as you can see so far, my method is far more in depth and systemized on things, and I also like having it outside of QBO in case they change what they're going to do. I like to have supporting documentation. I like to pull things out of QBO in case there are changes to prior periods, so I can come back and say, okay, what did the balance sheet look like last month? Why is it different now? And I can kind of pinpoint what those changes are. So I have this slide here within the deck of what the differences, the comparisons are, but let's actually look at the tool within QBO. So coming into here, you'll see that there's 3 areas that we have. Okay, we have a transaction review, account reconciliation, and final review. So remember, I have first that planning stage, and that's where I'm scheduling out the work, and then I am also figuring out now exactly what I'm going to do and creating that checklist for all of the accounts on things. So this gives you a little bit more of the checklist. It doesn't give you the deadlines, due dates of things. It doesn't give you the sign off of completing the work so you know it's done or when you completed it, that sort of stuff. So they like to start off with a transaction review and go through all of this. Now, this is my sample company. I don't have a lot of stuff in here, but you can imagine if I have uncategorized transactions, there's a lot of that. Transactions without payees, unapplied payments, and you can even add in more items to check if you want to. You can make those changes and stuff like that. For me, I still like just going through the chart of accounts and going through that list and just verifying all of those amounts. But my big issue here, I believe, is that I prefer that you do the reconciliations before you start going in and reviewing the transactions themselves. This is because when you do an account reconciliation, you're verifying that you have all of the transactions that the bank account has. And you don't have more, you don't have less, unless there's some reason, some good reason for that. But you might be missing transactions, you might have duplicate transactions, and you take care of all of that when you go through the reconciliation process. If I go in and I start just reviewing transactions like this, I might be spending time on transactions that shouldn't even be in QBO, and I think that's a total waste. So that's why I like the reconciliations being the first phase truly of doing the month-end work, right? So we have that. We have this transaction review in here. There's nothing wrong necessarily with going through some of this stuff, but some of it might not be the biggest deal when you go through month end, okay? The next thing here is account reconciliation. It's going to list out your accounts and see when you reconcile them, right? So you're going to go through here, reconcile the accounts. Yay, whippy, whoopee. And I guess, yeah, when you're done, you select done on everything. Again, I like to have my accounts listed out and make sure I get them done individually. It's a preference. It's just what I like to do. And then you also have additional items that you might want to reconcile. Note they don't really have a work paper area here. And so it kind of gets split up between this account reconciliation area and then the final review. So when I come over here, this is where they're pulling all of a sudden the accounts payable information, accounts receivable information, and they start getting you to pull other reports to review. And you can add, again, additional items and look at all of that. So this final review is pretty much like my work paper phase and then the final review phase that you're going to see of, checking everything and making everything is in place. So while you could probably use my method and add in information here, it's not everything that I do. It's not all of the information that I like and am able to look at. So while this is a great start, I prefer just using my checklist that I create for each client, and then I can just save that spreadsheet over next month, make a copy of it. So if I have a January checklist, I go to next month in this February checklist and I start, I clear out all the sign-offs and all of that sort of stuff, and I just do it again. So it just, for me, I like that flow. I like the workflow. It's comfortable. Again, it's outside of QBO in case there's anything that I needed, have that supporting documentation. They've made changes to features in the past and stuff like that, and who knows what's going to stay there. We have different actions here, edit, void, delete on stuff. Honestly, we're going through all of that when we're doing my month end. So that's, I wanted to show you and be transparent as to my process versus what is available within QuickBooks Online. Okay, let's jump into reconciliations and how they work within QBO. So the basic overall view of how reconciliations work is that we're matching up our accounting system to the bank statement. So within QBO, the first thing you do is that you're going to see your beginning balance that comes from your last reconciliation. If you've never done anything before, it's going to be 0, but that beginning balance just flows in to the reconciliation screen from the last reconciliation. So then you're going to enter in your ending balance and the date from the bank statement and move on to the next phase, and you will check off all of the transactions that come from the bank statement, and hopefully the difference is 0 at the end of the day, right? And then once you're done with that, you can complete your bank reconciliation. If there's any differences, you're going to want to investigate those and get a clear understanding of why there are differences. There are some things that are perfectly okay. So if I wrote a check at the end of the month and it hasn't cleared the bank by the end of the month, that's fine. I understand that's not going to be reconciled. Now, if there's a check that I wrote 5 months ago and it still hasn't reconciled, then that's something that I might need to deal with the client and look into further. So let's take a look within QBO and really look at reconciliations. So we're going to come over here, and as you can see, like I talked about, we have our beginning balance, right? This flows through from the prior reconciliation. You can see I had a reconciliation done before, so now I have my beginning balance. Now I'm going to put in my ending balance and the date, and I'm going to go in and start reconciling. So when we see this, the fun automation or the awesome automation about this is if you have connected the bank feed and have matched or added transactions from the bank feed, they're going to automatically be checked off in here. So you can see all of these little green squares means that it was added from the bank feed. It comes from the bank feed, and see, they're automatically checked off. Now, my bank feed was weird in this instance, so I didn't get all of the transactions from the bank feed, so some were just entered in here, right? So you see these are not automatically checked off. So that's the benefit, another benefit of the bank feed. Go in here, it's automatically going to check everything off. Hopefully your difference up here is 0. You're good to go, you finish, and you move on. That'd be awesome, right? Now, in this instance, we have all these transactions that haven't been checked off. For just thinking about it, for simplicity's sake, I'm just going to check everything, select all, and see what I have. Now, I still have a difference of 86.65. If I were, if I'm at this point, a couple of things that happen. You can see here that there is a date of the transaction and there's a cleared date. Sometimes that clear date is after the end of the month or the end of the period from the bank statement, so it really shouldn't be checked off. So you can uncheck those. Usually you see those at the end of the month, some sort of timing difference. So I know that there are 2 things that did not clear the bank as of January 31st. If you can't pick up on that very quickly, like I did here, then you're going to have to go through the bank statement and compare these transactions to what's on the bank statement. And honestly, at that point, if I'm going to do it, I uncheck everything and I individually just go through and just check everything off as it shows up on the bank statement. You can do sorting of payments, deposits, dates, or you can filter just to show you the payments. That makes it easier when you're comparing it to the bank statement, just to check things off. That's the worst case scenario of things. But I wouldn't recommend spending a lot of time trying to visually look between the bank statement and here, trying to figure out what that difference is, because every time I've done that, really can't find out what the difference is, and I still end up having to uncheck everything and go through it. So save yourself some time. If you can find it really quickly, if it's one of the last couple ones, that's great, right? So imagine here that I have this 2350. I want to show you that you can finish now. You can still finish. You notice there's a difference, but I can still press finish. What happens is that it will create a reconciliation adjustment for you within QBO. I hate reconciliation adjustments because theoretically everything should be fine. But you got to weigh that out, the cost benefit of you spending all the time trying to research something. If we're talking about like $5, 50 cents, all of that, it might not be worth it. You might just need to do that reconciliation adjustment. It kills me when I have to, but it comes down to if you are saving yourself time or not. Your client's still going to pay you for this, right? So it comes down to, do you want, how long are you going to waste on 50 cents? I'll tell you, I'll spend a lot of time wasting for 50 cents. So there's no right or wrong answer there. Just know that you could be losing money on just spending time on that. Now, again, if you're using the bank feed and you're going through all this, you shouldn't need to do any kind of adjustment. It should just work and be able to figure it out. So that's where I am. I'm going to go back and I'm going to check this off. Okay, I'm going to uncheck that and uncheck that. So then I just go in, I finish now, and my bank reconciliation is done. Cool. So let's talk about what happens if there's a difference in my beginning balance. So we're going to redo this whole thing and see how that looks. Okay, so here you can see that I'm trying to reconcile January again. It's a whole new situation. My beginning balance is off, and QBO is yelling and screaming at me about it. We have a little yellow sign down here, and this is a great area where it can help you troubleshoot what's going on. So you can see your account is not ready to reconcile yet. What can you do to fix it? So all you have to do is click here. And what's going to happen is you're going to have this reconciliation discrepancy report that comes up. Let me get rid of that. And you're going to see there's been changes to these transactions in here that have impacted it and created this discrepancy amount between your beginning balance from the last reconciliation you did and what is showing up now when I try to create this reconciliation. So something that you should know is that if a transaction has been reconciled, or even within the register, anything that has an R next to it does not show up as a transaction that can be reconciled again. So one common thing that happens is if the first time you connect to a bank account, QBO might bring in an opening balance. And what they nicely do for us is they automatically reconcile it without going through the reconciliation screens or anything like that. They just mark it as an R. So a lot of people come in and be like, what is going on? Why is there a difference? Especially if they've never reconciled before. I have gotten that question a million times from a lot of CPAs and accountants and bookkeepers. They're like, Kathy, I've never reconciled this account. It's telling me I have a beginning balance. Why? I can't figure out. There's no previous reconciliation report. There's nothing. What's going on? Well, that's because QBO put that nice little R on there and it doesn't show up because, and there hasn't actually been a reconciliation because you didn't go through the actual steps, but it's impacting your beginning balance. So I'm giving you an example of kind of what that looks like here. So we have a transaction that has been reconciled in the register. So it's marked up as R, did not go through the screen process. Now I can't guarantee you if that opening balance equity transaction shows up, that would show up in a discrepancy report because you've never done a bank reconciliation before, so there shouldn't be a discrepancy report. So what you'll want to do is go into the bank register and look for that R on something and change it. I'll show you that. Okay. Then we have another thing here of this amount changed. Why did it change? What, I had a reconciled amount and then I have the current amount, which is nothing. Okay. And so it's 6201. Now, what's cool here is that I can click on here, view the transaction, and see what's going on things. It gives me the audit history of it, so you can see when it was added, indirect, voided. Oh, I voided the transaction. That's what happened. So I'll click on this link. The transaction will come in, and I didn't actually want to void this transaction. So I go back here, it's 6201. I'm going to put it back and change it to 6201. I'm going to get rid of this little memo that was voided, and it's back to how it was before. I did not want to void it. I want that done because it actually happened. It reconciled the bank, and yes, okay, so I'm taking care of that. And save and close, and it should be all good to go. Now, since I just popped open this window, it's not saving and closing for me. It's fine. We're back here. The problem comes in with this little reconciliation thing. There's times where you go and view that. It's going to show the audit history. If someone changes the cleared to an R, you can't just go to the bill payment itself right here and change it here. You actually have to go to the bank register and change it. So say I'm here, I'm going to say done. Okay, I'm just going to go scroll up here and I have this bank register. Okay, I'm going to come in. You can see here these different statuses that we have. We have something that has not been attached to a bank transaction. So there's nothing here. If it is, it's done the C on it. So this is what happens when everything's all checked off. It shows this little connection and it automatically marks it as a C when it does that. So I'm scrolling down here and let me look for that $900. So you can see here is an R. Funny thing is, you can just come in here and click it and change it. I can click it as a C, I can click it and change it to an R, or I can make it unchecked and no status whatsoever. So it's not a lot of controls there, but you can see what's happening, how this is making an impact on things. So I'm just going to put it as a C because I want to automatically check it off on the reconciliation. And I am going to press save and say, yes, I want to modify it. Yes, I want to do all of that wonderful stuff. And I'm going to go in, press reconcile now. Let it load. And now I don't have an issue with my beginning balance. And I can go on through the reconciliation like I did before because I fixed everything. Thanks to that reconciliation discrepancy report and understanding how that one tip about having that R on transactions, if it's not in the reconciliation discrepancy account, check for that because it's a very, very common issue. Okay, next we're going to talk about work papers. And it's funny, I actually had someone contact me once and said that they had heard from other accountants and bookkeepers that work papers were outdated and no longer needed. They're just supporting spreadsheets or documents for an amount on a balance sheet. If you're going to go through an audit, the auditors are going to want to know how you came up with that number, especially if you're doing some sort of estimate or calculation like prepaid expenses, accruals, or deferrals, or something like that. You're going to need some sort of support for that, and it doesn't really go into QBO as the support, so you're going to have some sort of spreadsheet. That's what they look at. That's what they review. So I find it interesting that some people out there don't believe that you need work papers anymore. That might be the same crew that thinks that month end is just bank reconciliations. I don't know. But I am a firm believer that we need to have some sort of support and review of these balances on the balance sheet. And if it's more complicated than just utilizing the reconciliation feature within QBO, I'm going to use a spreadsheet. And just like I do with a checklist, I'm going to just copy it into the next month. Or if I have a process where I'm just exporting some information from QBO, I'll do that and just save it. That way, within my month of having all the supporting documentation, my checklist, my work papers, and any other stuff that I used for that month, I just save it in one folder for my client. And then the next month, I have a whole new folder for them. That's how I do things. So if you look here, I have a very basic methodology when it comes to work papers, just the formatting of things. So what I really like to do is just, if I'm exporting anything from QBO, I keep that in the same color in black because it shows that it came directly from QBO. And then if I'm doing any work to it, I like to do that in a different color. Again, this comes back from audit days. Something that they usually do, they will take a spreadsheet that's prepared by the client, and if they do any work on it, well, they have to do work and reviewing of it, all of the stuff that they do, they put in a separate color so that they can show what the difference is. So they might end up with a very colorful rainbow when it comes to working on my spreadsheets. But this way I can see like, okay, what came from QBO? What am I adding to it or reviewing or that sort of thing? So, and then at the very end, when it comes to however you created the balance, figured out what the balance total is and looked at anything, verified all this sort of stuff, all the stuff that you do, you want to put in the amount that's on the balance sheet and show like, hey, all the way down here, I have my total and this is from the balance sheet and there's no difference. It's ties to the balance sheet. We're good. We're good to go, because really you want your spreadsheet to accurately and be the same as what's on the balance sheet. Otherwise, there's no point. Like, we didn't do it right on that. So this is what I like to do. One thing to note, and in this example here that I'm showing you, if you look at it, it says per harvest. That is another app, and I think I've talked about that before. It was a horrible integration at that point several years ago, where I had to do a lot of work of matching what was in QBO to what was in Harvest. So the point here is that if you're working with third-party apps and they have impacts on accounts on the balance sheet, which they will, then you want to find some sort of reporting from that app and compare that balance to what's in QBO and make sure that integration and the syncing and everything is working. Otherwise, you can come in, end up with some big problems and issues at the end of the day. So it's usually, it should be a pretty quick process, assuming the sync works and everything's good to go. But you just want to make sure you have that there saying, okay, I looked at it, there's no problem, move on to the next thing. So let me show you a couple of work papers that I like to do, okay? So the first thing here is, I talked about the AR aging, and I like to use that as a tool to review the accounts receivable report. So here I'm going to pull up the AR aging. You can on here change the date that it runs through, and you want to make sure it's through the report date. So I'm going to change it to the end of the month. So that is the amount down here is going to match what is on the accounts receivable balance on the balance sheet. Okay, so I have this supporting documentation that makes up the balance for it. So I would just export this to Excel and do that, open it up. Where'd it go? There we go. Quick tip for you with the formatting and getting things out into Excel. You have really small text and you have bigger text. So what I like to do is I highlight everything, I press the little text down button, and it makes the small text a lot bigger for you. I like to unmerge things and then just double click here, and it makes all the columns the right size. So it's a really quick fix for me that I just can figure out. So like I said, I like to change the font color to it. And looking at this, the biggest thing that I'm paying attention to here is this $85. It's in the amount that's 91 days and over past due. So the question is that still something that we want to have listing in accounts receivable? So I have this, right? Here's my third party, or my supporting documentation I have over here, right? So then I want to come in and I'm going to look at the $85. And so I see this invoice. This is actually from December 2019. So that's a pretty long time ago. So is this something that I want to void out? Is it something that the client needs to resend again? They are expecting it for whatever reason? I want to have some sort of explanation so I understand it. And if this continues to be an issue, it stays on my work papers as notes going forward. So I just understand why that amount's there. So if it ever comes up, I have that explanation. This is the sort of thing that you want to understand the numbers. You want to understand what makes everything up. If you just know that your client has some outstanding AR that's old and they're trying to collect on it, you know that, and you can figure out what amount of the open AR is really that amount, and just have that in your head. It's a better understanding of the business and what's going on. So those are the things that I like to look at. If another thing you can do is print this report or save this report, send it off to the client and say, hey, can you look at this, make sure everything looks right to you, let me know if there's anything you want to change or fix or anything like that. And they could even there say, hey, write off this $85 or delete the invoice, whatever you need to do. Now, if it's accrual based accounting, you want to make sure that you get rid of that invoice in the current year. You're not changing prior numbers, because that just messes up other stuff. We don't want to do that. But it's, giving that high level view to the client. They understand AR more in what's coming in, what they're dealing with clients, most likely, right? Compare that to accounts payable. They might not know exactly what all bills are outstanding and what needs to be paid and why things might be overdue or late or something like that. You can still send it to them. It depends on what the business owner or whoever your contact is understands about these balances and understands about the detail going into it. I like to see, like I've said before, if you have a negative amount on here, well, that means something went wrong. So just looking at this at a high level and seeing, okay, does this all make sense? Another thing you can do is if you have, if your client has customers that pay partial amounts on the invoices, or if you have late fees that are charged onto the invoice, but the client then doesn't pay the late fee amount, you just write those off, you might want to look at the actual detail under this. So when you're in one of these reports, you could just click on the total amount down here, and it gives you all of the invoices within the aging grouping here. So things that I would look at is, hey, the amount was $459, but I have an open balance of $239. Understanding why that's there and looking at that. It's a matter of, is that a common issue that you need to deal with your client? Then you want to dig in deeper. If that's not something that you really look at or have to worry about with a client, then just pulling the AR aging should be enough for that. The next report or work paper example that I have for you is when I look at undeposited funds. This one's a little bit of a sucker, right? Because look at this, definitely an example of transactions that are going in and out, in and out, in and out of things. Remember, undeposited funds kind of goes back to the days where you would receive checks in for the business. You'd mark that payment within QBO, but it might take a while to have the deposit, or you group a lot of checks together to create that deposit. So connecting it to the bank feed, you might have 5 checks that make up that deposit and comes in through the bank feed. You want to put something in undeposited funds, group it all into deposit, and there you go. And it matches that way. So what happens a lot is undeposited funds is an area where people make a lot of mistakes, and they'll put stuff in undeposited funds and won't clear it out. They won't actually mark it as deposited. When it comes in from the bank account, they mark it as something else. They might mark it as revenue. They might mark it as a payment on a different invoice for a customer or something like that. So it can create a mess on it. So it's definitely an account you want to pay attention to and make sure there's nothing really old sitting in there. So you can see I ran the balance sheet looking at January 31st. The amount in undeposited funds is $2,062. A quick way to look at this, and let me actually just pop this up and you can see the detail. So I have the $2,062 right there, right? If you want to come up what the number is one thing you can do is just look at creating a bank deposit. And if it's a whole bunch of transactions that haven't been deposited yet, that amount might equal what amount is on your balance sheet. Now, this is not the same situation here. Okay, so I have 387, but that's not the amount that I have on my balance sheet as of January 31st. So, what do I do? Well, I have this little tricky way to run this report so that I can figure out which client it is that has undeposited funds at those points. So I'll come in here, I'll customize it, and instead of grouping it by account, I'm going to group it by customer. And instead of showing the entire month, I don't need to know all the ins and outs for the month. I just need to know what the ending balance is on January 31st. So what I'll do when I run this, it gives me this nice nifty little report that figures out what the total is, what clients it is related to. So let me export this. Open. So I'm going to do the same little thing, make the text smaller, but it really makes everything the same size, and make the small stuff really big, right? And so you can see here I have 1675 and 387. If I were to add those two up, that equals the amount that's on the balance sheet, right? Okay. So I'll change that to red just because that's how I showed you I like doing things. So I have that there. So now I can see I have 1675, 52, and 387. So if I go back and look at QBO and look at, say, I want to look at, oop, that's not what I want to do. Come over here. Wrong one. Let me close that. Oh, nope, I got it right. So it was Cool Cars and Freeman Sporting. So I want to look at, if I go over to the bank deposit, Freeman Sporting is still sitting out there, right? So I'm going to go over to customers. I'm going to look at Cool Cars, right? So I can see here that 1675.52 that I have over here is a payment. So looking at this payment, the payment came in on January 18th, but it was deposited on February 2nd. So that explains why when I run the report now, it doesn't show up as, or I look at the bank deposit area, it's done, it's completed, okay? So I'll come in here and say deposited on 2/2 right here. And I'll do that. And then I want to look at this other sucker just because I'm curious. And I'm going to look at that and I see a payment of 387. Oops, I clicked the wrong one. 387. So it's the issue here that I have is it's the same payment date. It's the same thing of January 18th. And I put it into undeposited funds, but it hasn't been deposited yet. And I'm looking at books through January 31st. So why hasn't it been deposited yet? Maybe someone forgot to scan it. Maybe it's still in in the good old fashioned days. Maybe it's in a drawer somewhere, something like that. It just hasn't been deposited into the bank yet. Or maybe someone made a deposit into the bank account and didn't actually code it to this payment correctly. And so we need to clean that up. So it's something I want to look at and I would investigate more. So here, if I look through it and everything's fine, then, found it on hand will be deposited onto 12. Okay, so we have that there. Some sort of explanation so that if 387 shows up again next month, then we really have an issue and figure out what's going on and clean it up on things. So that's kind of what I like to do. And so it explains the balance as of January 31st because we know that the undeposited funds account goes up and down and it changes over time. So we want to see on the balance sheet, we're good with these numbers. Awesome, good to go. Okay, so once we get done with all the work papers, I like to move into what I call the review and report phase of month end. So as you can see here, I have my month end checklist, and this is everything. Now assume that I've completed everything, signed off on stuff, all of that. So the first thing I want to do is make sure that I did everything I need to do on the balance sheet, and I went through all of that. So what I like to do is I run the balance sheet, and I'll do it for last month, compare it to the prior period, and do the dollar change. It makes it easier on my brain. I don't have to do the math. Then I'll export that to Excel. Just download that and open it up. Remember my little thing, I just highlight everything, press the down key, and we are good to go. Oop. So I want to move this over here so we can kind of look at this, right? So what I'll end up doing, ignore. Okay, so I'm going to change that font. So what I end up doing is I really quickly go through this and say what I did on everything. So I reconciled, I have a work paper, I probably have a work paper for that, work paper for that. There was no change. Again, see, like note changes, that was my task. So I really didn't have to do any other work, like a work paper or anything like that, and deal with that in there. I didn't have a zero balance in undeposited funds, so that's why I have a work paper for it. And I would just go through all of this. And the reason for doing this is because if I'm just copying and saving this as a new spreadsheet every month, this checklist, I want to make sure I'm not missing an account here. If a new account pops up, I want to make sure like, oh, I didn't miss anything, everything's good to go, and maybe I need to add a new account over into liabilities because it was added last month, and I'll determine what task needs to be done and all that sort of stuff. Nice stuff. Whatever. The other thing that comes into play, ignore. The other thing that comes into play here is if you are having someone else do the work and then you are the reviewer, this is the place where you come in and be like, okay, let me review all of the work. And so when I come in and I see it's reconciled, I would look at the reconciliation report within QBO and see if there's any unreconciled transactions. Make sure that that stuff's been taken care of and everything looks good on that, right? If there's a work paper, I'd open up the work paper, make sure that balance is the same as what's on the balance sheet here. Because, hey, some things could change from all the work that was done through everything. So I want to make sure everything's in the right place, taken care of, all of that fun jazz. So this is a great way to go through all of that. The next thing that I do is I go into the P&L. So assume all of this is good. We've taken care of all of that. We've locked down the balance sheet, right? So I'm going to save that, close it. There we go. Same sort of thing I like to do for the P&L. I come in here, I run the profit and loss, and I'm going to go for last month, but then I'm going to get a little greedy here. We have a ton of options here. So I'm going to do previous period, previous year, year to date, prior year to date. Okay, maybe that doesn't apply because we're looking at just January. So I don't really need to have a whole bunch of extra columns. So I'll run the report and then export it to Excel because I want to have that documentation. I want to show what I looked at last month and reviewed this. So I'm going to come in here, change my little font. Yippee. Maybe double click on things. Oop. I don't want to do that. just make this a little bit bigger. Okay. Um, it's the wrap text that's bugging me. Okay, so looking at all of this, I would, now this is a sample company, so it doesn't have information from last year. So that's not helpful, right? I'm going to just hide that column. But imagine I have a whole bunch of columns so I can look at stuff and see and compare and figure out what's going on everything. So I can see design income, discount, it's given, I can see revenue, then I'll come down to cost of goods sold. There was no cost of goods sold last in December. Why is that? Is there something like, is it usually zero and then all of a sudden we have something? What's going on there? Then like just looking at the patterns and see if there's anything that pops up, like maintenance, equipment repairs, what's going on here, right? So I might make notes on here to say, okay, investigate that, look at that, see what's going on. Now, remember how I was talking about if you have a staff person doing this and then you're the reviewer, I would actually have them make sure once they're done with the balance sheet, do this and my next step, which is actually going back into QBO. And what I like to do is I come over here to reclassify transactions. And the reason I like doing this is that it gives me a quick look at this stuff, at all of the transactions. So I don't want to dig into drill into every transaction, make sure it's right. I want to do like a high scan. Now, if it's a staff person, they need to learn this stuff and they might need to do more, right? So looking at this, I have my design income. So I can look and see, hey, everything makes sense here. Just high level looking at it. I knew that was going to happen because a little thing popped up and it took me over to that. So let's do reclassify again. Let's get rid of that little pop-up. Okay, so we're in here and we see this stuff, right? We're looking at things. So anything I made a note of before when I was looking at that comparative profit and loss statement, I can make sure to look at it here and get a reason as to what's going on. The other thing I'm looking at is to make sure these transactions are in the right place. There's nothing like funky in them. Remember that some of these transactions are not going to show up. And let's see if we can do modify all. It is not showing up at all. That might be something that I want to investigate and figure out. Why is that not showing up in reclassify? That one's interesting. Landscaping, you can see that they're invoices, sales receipt. If something showed up like an expense in a revenue account, I'd want to fix that. I want to clean that up. So going through here, just high level, looking at stuff. Oh, there we go. There's an expense and plant and sales. So why is that there? Pick it up. I clicked on it. See if it'll pop open. Okay, so it is truly an expense. I don't know what happened. Plants and soils. So if I do plant, see there's two of them. One is an income account. One is a expense account. So I want to see. And sometimes, guys, this is just hard for people to see. This is why I like having, are we in expenses? Okay, they're going to actually list expenses first. So there we go. There we go, jobs and expenses. So I'm saving that. Now, I could have obviously done reclassify transactions there. But, come on. Oh, that's a new one. But I dug into it, so I just went ahead and changed it when I was in there to figure out what was going on. So, again, I just go through here, scan through what's going on, see if it all makes sense. We still have income accounts. There's cost of goods sold on that. Again, it's not showing up. Maybe you want to go back and drill into it and make sure it's right on stuff. So coming in here, looking at these transactions, you can see I'm scanning through things, see if it makes sense, see if they're in the right place. And if I have a note on why this was the way it was, or here, I moved whatever dollar amount to the expense account, right? Gonna unwrap that sucker and have that. So that way you can see, like, here's what I did, here's what I fixed on things, and that sort of thing. Okay. So, I mean, this is what I go through. This is my final review of making sure everything's in the right place. Now, if you do have other checklist items that we talked about before, maybe I need to make sure that all of the transactions have classes on them. So you could run a profit and loss by class and see what's not specified on here. Another thing, maybe they do use billable expenses. So I can run in here and do unbilled charges and look at those. Now you can't really look at it as of the end of the month. You can't change that date here, but you can see what's sitting out here. And I can see things are from January 15th that haven't been invoiced yet. So is that something I need to talk to the client about, something that we need to take care of, like we're missing something? So remember, this is also kind of where we're just seeing if there's something just outstanding that we don't want to miss. Just doing our double checks on things. It's not something that I always have to check on every day or every week, but this is my making sure everything's in the right place and taken care of in the books, and the client can rely on me and trust me that I'm taking care of things and things are good to go on stuff. So that's what I go through on reviewing the balance sheet and the P&L. So remember, the last stage or last little thing we do would be reporting. The reporting can be as simple as just letting the client know that you're done with your month end. If you have any questions for them, any comments for them, you can do that. But communication is key with your client, and continuing to have points of contact with them without overloading them is important, so that they don't forget that you are valuable and you're doing this work, and it continues to work. Because sometimes things are going so smoothly because you're doing such a great job that they forget you're there, and you don't want that to happen. I'll talk about that more in our next lesson on client communications. The other thing, maybe you go out from there. You do export some reports from QBO. Maybe use the management reporting like we learned about in the last lesson. Maybe use some sort of third-party app out there to come up with reporting. Maybe you just export stuff and you create your own customized reporting or dashboards and that sort of thing. You can do a whole bunch of sort of stuff when it comes to the reporting thing. You can also get to the point of having consultations with a client, having month-end reviews with them, have a call, go through everything you went through. There's all those different levels of support that you can provide. It's just a matter of matching up with what the client needs and what you feel comfortable doing. So those are all the things. And that's really, I've gone through all of month end, everything that I do, my planning, all the different phases that I go through, scheduling those out, getting those reconciliations done, going through work papers, right? And then doing my final review of making sure that everything that I did is right in the same place, the balance sheet looks good, the P&L, all the revenue expenses look like they're in the right place, and everything's taken care of. So that is everything I have for month end. Again, remember I have another course on all of month end. So I dive way deeper into this stuff. I have some more templates for work papers, and you can get even further into it. But this I tell you is a great start, and I'm giving you a ton of great nuggets here that most other people are not getting. So I hope this gives you a great place. I know you're fully capable of going in and doing month-end work just from what you learned here. So thank you guys. Look forward to our next lesson.